Welcome to the Property Pod with Moneyweb. The property sector is an ever-changing sector, and in this podcast series, your host Suren Naidu chats to movers and shakers in the property industry.
Hello and welcome to the Property Pod, South Africa's leading real estate investor podcast right here on Moneyweb. It also features as a video on our YouTube channel, that's Moneyweb TV. Now, our guest on this week's show is no stranger to the property industry or this podcast. We've had him a couple of times on the show, but this is the first time that we're having him on a video format. He is the CEO of unlisted property giant Pareto Limited, and his name is Malusi Kekana. Malusi has been with the group for about 10 years now, so it's a good time to catch up and have a broader look at the group. One of the big deals over the last year has been a $1 billion+ deal buying out Sandton Convention Centre and some of the hotels around the convention centre from Liberty and Standard Bank. But the group also owns some major shopping centres in South Africa. On a previous episode, and that was a few years ago, Malusi was very vocal about poor service delivery and lack of leadership in City of Joburg. So we'll also chat to him and get his latest views on developments in COJ. That's if he's going to comment and be as provocative as he was previously. But the group, besides that acquisition, also has, as I mentioned, a number of major retail properties in South Africa, and those will have investments over time, and we'll catch up in terms of some of those upgrades. In addition, a little bit of a mouthful, the group has a exposure offshore through acquisitions via Atterbury Property and Atterbury's Europe business. Now, Malusi, welcome back to the Property Pod.
No, thank you. Thank you for having me, Suren. Thank you.
We last spoke in February 2025, just over a year ago, but it's been a very busy year for you the last 12 months. You know, you have had that big deal that I mentioned that we'll go into shortly, but also a new residential project around a similar range, quite a big office to resi conversion at Menlyn Park in Pretoria. But let's kick off with that Sandton deal. Was that your biggest deal and project over the last 12 months?
Yeah, no, it was. We did two deals in that period, maybe 18 months. One was we converted our debt that we had in Atterbury Europe into additional shareholding in the properties in Cyprus, which gave us shareholding of 70% in each Mall of Cyprus and Mall of Ngomi, which has taken our interests from a 50-50 to where we now own effectively 85% of those two properties. We have also then done this transaction with Standard Bank and Liberty, as you correctly say, which resulted in us making an offer for the Garden Court, the Convention Centre, and the Sandton Towers. And the other transaction we did was the joint venture with Diversity, a 50-50 transaction with Diversity, in terms of which we are now doing a 850 million development in Main Lane, which we'll be calling Main Lane Apartments, which is currently under construction.
So there's quite a bit on the go, but let's stick to that big deal around 1.1 billion rand. It's a scoop of some prime assets, especially considering Liberty and Standard Bank spent, I believe, around 200 million to upgrade the old Intercontinental, which was combined by Southern Sun to be run as the Southern Sun, the Sandton Sun, and Towers. Now, Pareto has purchased the Towers together with Sandton Convention Centre, which was buzzing last week for the Google Summit that I attended. Some prime assets, obviously, initially when the deal was announced, Southern Sun was mentioned, but you decided to go it alone. Obviously, you had preemptive rights there. Can you share what was behind was it an easy decision? Because those are some really iconic assets.
So, yeah, we decided to exercise the preemptive on the transaction, in light of the fact that those properties have got a very major impact on the shopping center itself. And we just thought at the time that, it's something that we could do. But Southern Sun will continue to manage these assets. They've got fairly long leases still in place, which they will continue to enjoy going forward. Yeah, and it was a big transaction and quite significant in a sense, as you correctly say, both the positioning as well as the history of these assets in relation to the Sandton precinct itself. So yeah, it's quite symbolically quite a big transaction in that way.
Now, are you looking at other big acquisitions either in South Africa or offshore? I looked at your last financial results. I'm not sure if it's post that latest acquisition, but your LTV was relatively low at around 33%.
Yeah, we are looking. So the numbers that you'd have seen don't include the consolidation of the latest acquisition, which I think will probably be neutral. Yeah, so we do have a good headroom in terms of interest cover ratio, as well as in terms of our loan to value. And we are evaluating quite a number of transactions, both locally and offshore as well.
Any hints on some of those transactions, maybe locally? Then the reason I ask is because Standard Bank also sold Bochebelo Mall to Vukile Property Fund recently. Have you heard anything? Are they considering sending a little bit more to Pareto of your current stake in Sandton City Shopping Centre?
No, we're looking at other deals unrelated to that. We have a precinct strategy. So our strategy is not purely acquisition. It's also the redevelopment of our existing properties, defending what we have. So by and large, the use of our balance sheet will be to evolve from just a pure shopping center to more retail precinct strategies. In retail today, you have to offer beyond shopping and look at experience. So there's quite a number of things that we are looking to do on our properties to bring that experience. So at Cresta, we bring in some exciting entertainment aspects. We're doing the same thing at Southgate. You'll have seen at Pavilion, we did the restaurants, the rooftop restaurants, and we're looking to do apartments at Westgate, about 500, 600 units that we will be building at Westgate, and also other non-pure retail stuff. We had our first experience of bringing in something like a hardware in a shopping center space at Cresta. So we're looking at other non-retail uses, gyms, hardwares, depending on feasibility, of course. But largely our focus is going to be on experience that we want to bring, and other uses as well. Hotels, we're looking at probably 2 or 3 hotels that we will be building on our properties. So those are the things that we'll be busy doing in terms of our capital expenditure. We've had big exposure to big boxes, Pick n Pay, Edgar's, and so on, and then reconfiguring those as they are reducing their space and bringing in other tenants to take up that space. So that will also keep us quite... So it's active asset management and some redevelopment and expansions, yeah.
Well, my next question was for you to give us an idea of the scale of your portfolio. You've mentioned some of those properties, so we don't need to talk about the specific properties. But for those who might not know, this is your 10th year as CEO. How has the Pareto portfolio grown since you've taken over about back in 2016? Because you've highlighted some of the properties that you have and, the projects underway, which we'll get to in a separate question after this.
Yeah, so when I joined Pareto, the net asset value of the business was around 12 billion. In the last 10 years, we have grown that NAV to 25 billion. So we've added approximately about 12 billion of value over the 10 years. And I must say that that was without any shareholder equity contribution. So it's just been the kind of things that we're talking about that we've been doing. So we've seen the value of the assets grow to currently about 45 billion rand in terms of a gross asset value. Yeah, so that has been the growth of the business, and we have also expanded overseas into Cyprus, Romania, and Serbia through the Atterbury Europe platform, which we currently own 50%. And in addition to that, we own additional 70% of shareholding of the assets in Cyprus. So that is where we have been over the last 10 years and to where we are today.
How is the CE portfolio doing? You said you're also looking at further acquisitions. Is it new markets in that Eastern Europe area? And are you still working with Atterbury on those properties?
Yeah, because we sort of like long-term institutional investor and working with entrepreneurs from the Atterbury stable. So we do have a team that is based in Amsterdam that is, working for Atterbury Europe, and they are our eyes and ears or offshore. We are one team. And so they typically, even if we see transactions, they would be the ones who would mine it, assess it, and so on. So we are looking at different regions in both Central Eastern Europe for expansion. So we have looked at a couple of transactions. I must say there has been quite a bit of yield compression that has happened. So we it's the opportunities. Given how conservative we are. In terms of the management of our capital structure. So it's not often that we come across, things that make sense. So we have looked at things, but they didn't interest us in terms of the pricing and also just in terms of the fit with the portfolio. But we are looking.
Before we go ahead, Pareto is a pension-backed business. Can you give us a bit of insight for those who might not know who are, your stakeholders, who Pareto is backed by?
Yeah, so Pareto is a platform for the Government Employees Pension Fund. So we are owned by the Government Employees Pension Fund. When I came here, we had a B transaction in which we bought shares, but those shares in the COVID and everything, they came underwater. So we are discussing now a revised management structure that would replace that kind of a transaction. But for now, that's the shareholder. And yeah, we will in time also explore the possibility of maybe looking to become a REIT, maybe listed or unlisted, but it's something that we'll be looking at as we move forward. Yeah.
Well, I asked you about listing in previous interviews. The property companies are doing better, and some, until the Middle Eastern crisis, were actually trading above premiums to book. Does that mean potential listing could come sooner, or is it still pretty much being discussed at the moment?
No, it could come probably in the next 3 years. That's something that we're definitely looking at. Yeah, we've become quite a big part of the unlisted portfolio, about 40% of the unlisted portfolio inside the PIC. So, we're not concentration risk, but at the same time, I think diversifying pools of risk of cash for a business, and it's a success story, by the way, for them as well, because sometimes the unlisted portfolio tends to be characterized with investments that have gone south, whereas this one is an investment that we took from a medium-sized to now a large business that is ready to go for a listing. And I think, that's what most investors in unlisted, private equity and so on, where they would like to see investee companies ending up, is a dilution or exit via a listed platform or trade sale. So we're looking at that. So yeah, so that's something that we believe is important for us to do, to diversify shareholding, diversify also sources of capital, going forward. Our appetite is getting big. So, and therefore the checks that we're looking at, they're also getting big. So I think it's at a point now that I think having partners would be helpful.
I suppose even from a BE perspective, considering you said that previous BE deal went underwater, that could be an opportunity from the listing as well.
Yeah, definitely. So we'll look to bring in strategic equity partners, bring empowerment shareholders. So those are things that we'll definitely look at as part and parcel of the listing process. Yeah.
Now, you mentioned some of the expansion projects. Where are you looking at expanding, Menlyn Park, 850 million rand joint venture with Diversity on that office to rental apartments conversion? Can you give us an update on where things stand there? Are cranes up, and when is that expected to be complete? And is that the first phase? What are some of the other projects at Menlyn, which is your flagship asset? But you talked about hotels and other potential offerings at your other properties. I know you have a Tiger Valley Shopping Center in the Western Cape, and you also mentioned Pavilion.
Over and above the apartments at Menlyn, we do have quite a bit of power. So that we look to do different things on that. So that we look at hospitality, home nodes, etc., based on demand and yield. So we are busy revising our urban design frameworks at the moment to look at what's the highest and best use. So we will be in a very firm position in the next couple of weeks or so. But for now, we're looking at hospitality and also other forms of retail like home and etc. And then with Tiger Valley, same. It's I think the Western Cape is growing quite aggressively, and Tiger Valley, we do have a partner there, MMI, managed by Eris, and we actually had a conversation recently where we're looking at plans to look at expansion opportunities. It's been trading extremely well, and I think it deserves some capital expansion. And there's a lot of interest there as well in office and leisure and so on. So those are some of the expansions that we'll be doing. Yeah.
Now, Cresta is slightly different. You talked about big box and potentially residential. Is there opportunities for hotel at Cresta? And I know you had some difficulty or challenges with the eThekwini municipality trying to convince them about a hotel at the Pavilion, which kind of makes sense. It's a stopover spot before people head to Johannesburg, before leaving Durban. But it also is right next door to Westway Office Park, which has the head offices of the likes of RCL and the Boxer superstores. So, it's almost like the Umhlanga Ridge area of the West.
So definitely, Cresta is really about defending the West, making sure your North Cliff. I mean, it plays a very important role in terms of the urban edge, because when you go east of Cresta, I think you've seen that the area has lost the neighborhood status has really come down quite a bit. So we will continue to make investment there to defend Cresta, and obviously even your North Cliff going up benefits quite a great deal from that because those are important catchment area. So we will be looking to make investment. It won't be a hotel. It will largely be around resi and, as I said, outdoor, type of entertainment and those kind of things. And then with Westville, no, we have a good relationship now with the council. So I think things are going quite well there. The road is being expanded now. It's obviously been a bit of an inconvenience, but we're quite happy with that because, we've seen how the exit for Gateway, once that was fixed, how that has benefited Gateway. So we're hoping that it'll have the same impact of easy in, easy out. And yeah, we do have quite a bit of bulk, and things like leisure and so on we look at. One of the things that we are doing is actually at Southgate, it's establishing what we're going to call the Andrew Mlangeni, a park, which is going to be a children's park and also dedicated to the memory of the old man, Andrew Mlangeni. So that's something that we'll be doing that. So it will be the premier children's destination in the South.
So there's a lot happening in the group. Malusi, you mentioned, you are former ANC Youth League. I know you haven't been in politics for a long time, but the reason I asked, I thought you were very vocal in my first interview with you on the Property Pod, I don't know, maybe about 4 years ago. talking
Yeah.
about city of Joburg, and you said it needs the best leadership to as South Africa's economic hub. A lot has changed, a lot more challenges. Is some good news this week from Moody's, but the leadership challenge continues, and service delivery is a big problem in city of Joburg, particularly, and Gauteng. What's your thoughts? Can Joburg be saved, and what needs to be done to save Joburg and to ensure that property values increase?
No, so Joburg is the seventh largest economy on the African continent. I mean, that's a fact, right? It's bigger than Kenya. So the economy of Johannesburg is bigger than the economy of Kenya, just to put it
Wow.
in perspective, right? So it is not possible for South Africa to work if Johannesburg is not working. We are by far the biggest retail landlord in Johannesburg. So our performance as a business is intricately linked to the performance of Johannesburg. And in any event, as a corporate citizen, we can't do well unless the city and its people are doing well. So for us, our value proposition, it's really intricately linked to how well Johannesburg is doing. I must say, since I felt the way I felt, we did something about it, right? So we actually called together a meeting with Business Unity South Africa. We've actually deployed a resource into Busa for somebody to help with work with them, as the president has now tapped business to assist with the turning around of Johannesburg. So we're not complaining anymore. We are now collaborating as part and parcel of business to assist with making sure that Johannesburg is turned around. Yeah, as a student of history, I mean, I've seen cities like Singapore. If you see Singapore 30, 40 years ago, you see so many, parts of the world. And when you look at China and where China was, 30, 40 years ago. So you look at Shanghai today and Shanghai then, it's chalk and cheese, You look at Dubai then, you look at Dubai now. So I think for me, it's not all lost. I think that with the right leadership, support from us as business, but ultimately we pay taxes. So government has a duty to do what they get paid to do. But we, as a corporate citizen, we will assist. So I'm very hopeful. I think it took too long for the attention to be paid to the city, but it's better late than never. So we're quite happy with the trajectory of where things are heading, and we will put and have put in our full weight behind all efforts to make sure that we make this great city to sparkle again. And the other thing is we're putting money in our assets here. So that must tell you something. I mean, we will invest north of 2-3 billion rand over the next 3 years in our assets in Johannesburg. So that already tells you that we were voting with our feet. There was a point where we actually stopped putting investment in, feeling confident to put investment in South Africa. And that's when we expanded aggressively overseas. Now the pendulum has swung. We are now putting more money in South Africa than are putting overseas because the returns here are great, and it's a good country with a lot of potential. And we're very, very confident that we will turn the corner.
Well, the strong rand is also affecting the offshore performance of some property counters. But it's interesting you say that because the likes of Sandton is a precinct, but it's got the Sandton management district, and there's a lot of business input into making Sandton work. Obviously, some of your other properties like Cresta, as you say, will need more attention. Malusi, before you go, we talked about growth here, and it's good to hear you, Pareto, investing locally. But just on the water challenge, it's toned down a little bit, but that could rear its ugly head again in Johannesburg. What is the group doing around water, and are there any other challenges that you hope through Business Unity South Africa, Business Leadership South Africa? You are the former president of SAPOA, so that's also part of your interaction and push from the property side of business to get involved. What are some of the challenges that you'd like to see addressed more forcefully?
Yeah. Look, I mean, I think the number one issue we need to address, one is safety. right? I think for me, that's quite important. And I'm not talking about it from a property owner, property manager point of view. I'm talking about from an ordinary citizen point of view.
Mm.
There is an image about Johannesburg and safety, and we need to turn it around. I think it's not just properties, banks, everybody. We need to really make sure that we convey and make sure that the city is safe. We invest in infrastructure, cameras, a better policing, etc. I think that for me is quite important, and also having a clean city. So those things, they do impact. If we look at the quality of life survey, before you even get to infrastructure, water, housing, the top three things that people want, number one is jobs, is safety, and a clean city. So for me, that's where we need to be paying our attention. And as we're investing, we're not trying to, but we're also creating jobs during the construction, but also creating jobs post the construction. I was actually commending TFG for opening JD Sports at Southgate. And the comment I gave to the head of properties, Lisa, was not what a wonderful store you've created. I said to her, just look at the number of jobs you've created. And for me, that's what our tenants do. As we build, that's what they're doing. They're creating jobs. So that's number one. Number two is safety. And number three is a clean city. The issues around infrastructure really is about planning and investment. And I think as business and working with government, those are things that can be resolved. I don't think they are too difficult. For us, we have an ESG strategy, and sustainability and making our properties resilient is one of those things. So we have reduced just in this year, our water consumption by close to about 8 to 10%, waste to landfill, 84% of our waste is recycled, doesn't go to landfill. So we are making investment not just to demand more in terms of things like water and electricity, but in terms of sustainability, we're also using less and making sure that there's circularity, and we use a lot of the capacity that we have, not necessarily to demand more, but to reuse. Okay.
Before you go, you mentioned TFG. It will be remiss of me to not ask one of the biggest landlords in South Africa about occupancies. How is the portfolio doing overall? What are your vacancies standing at? And what are some of the big tenants that might be coming in? We had a lot of hype around Walmart opening. Are you in talks with Walmart? What are some of the other big brands that might be considering the Pareto portfolio across the country?
Yeah, so our vacancies now stand at 1.6, of which 1.2% are strategic vacancies. So these are tenants where we're doing work, there's beneficial occupation, so it will come to about 0.2, 0.3% vacancy. And just to put in perspective, it's over 1 million square meters. That means we've got less than 10,000 square meters, vacant. So yeah, when I joined the group, we were around 7%. So, we've stayed here at these vacancy levels quite low. Our weighted average lease expiry profile is around 3.1, 3.2 years. So we also have got, fairly acceptable duration of leases and so on. Yeah, and yes, I think as the economy has been picking up, not at the pace we want, of course, 1.5, 1.6%, as tenants have been showing interest, that has obviously been beneficial. Yeah, we have been chatting to Walmart, and I think there will be some changes in the portfolio. At this point, they are still assessing the impact of the first stores that they have opened, but they can speak for themselves. Yeah, but we are talking to them. We are also we're quite excited about some of the changes that will be happening with Mr. Price at PEV. Very, very exciting development. And yeah, so we have seen that our tenants generally have turned the corner, and they are demanding space. I think Pick n Pay is on the mend. We are talking to Pick n Pay to renew the leases with them and their new store formats. I think the work that they're doing, obviously the work that Sean and them are doing is going to take a while to show. But I must say that the momentum that they have now is in a positive direction, and we will support them. I think it's an important South African business. So I think those are some of the things that we're seeing happening.
It's a longer than I anticipated, but quick one on Menlyn Park. What is the vacancies there? And the reason I ask is I'll tell you after you answer that question.
Menlyn, we're less than 1%. Less than 1%.
So that means Menlyn is South Africa's biggest shopping center and not 4 ways more.
Yes. Yeah, no, it is. It is. Yeah. No, thank you very much.
That's a little bit of a light-hearted end to the interview. Malusi, thank you so much. We probably could chat for another half hour. That was Malusi Kekana. He's the group CEO of Pareto Limited, who and the company is looking to list in the next few years. So that's something to watch.
Thanks for listening to the Moneyweb Property Pod with Suren Naidu. To listen to more episodes, go to moneyweb.co.za or the Moneyweb app and follow Moneyweb News for daily updates.